Then I want to share some ideas with you, ladies and gentlemen, on the structure of the business. And I think the easiest way to do that would be to give you an example. An example I like to use is that of a bed and breakfast. Now, you can operate your bed and breakfast as a sole proprietor, or we can operate it as a partnership. If I'm in partnership with you, ma'am, what's your name? Melanie. Elizabeth, okay? Now, Elizabeth and myself could do the bed and breakfast as a partnership. We don't have to set up fancy structures. We're just going to be in a partnership. Or I could operate as a closed corporation or a Pty Limited. So here's the deal. Whether it's as a sole proprietor or as a partnership, the effect is the same. Melanie and I are doing this business. Elizabeth and I are doing this business together. And guess what? We make a mistake. And one of our customers gets very ill and has to go to a hospital because there's food poisoning. And they don't have medical aid, and the hospital bill is 100,000 rand. Or maybe one of our staff just doctored the food because they were unhappy because we had an inquiry for them. Eh? Now what happens is the customer says, Elizabeth, I want to sue you for 100,000 rand for my medical bills. So, we don't have the money. Okay, Elizabeth, then what we'll do is we're going to attach and we're going to sell your car and your house and your flat screen TV. We're going to sell all of that because we need to pay this guy his 100,000 rand. So the structure that is important for me is to be able to protect my house. I want to protect my flat screen TV. I want to protect my car. So in that instance, my personal assets are at risk. Now, if Melanie or Elizabeth has got 100 million rand sitting in the bank, and I've got 50 rand in the bank, who are they going to sue? Not me. They're going to sue her, because I'm what they call a man of straw. So when you're working in a sole proprietorship or in the partnership space, that's the legal liability that you suffer. However, Melanie, Elizabeth, you got a tripartite partnership here, man. What happens is, I say to you, listen, we'll use your house for the B&B, okay? But let's run the B&B as a closed corporation. And then the closed corporation rents your house from you and pays you rent. I said, we got the scenario now. Now the same customer comes, second time, gets sick again, 100,000 rand medical bills. Who's he going to sue now? The closed corporation. So what have I done? I've protected my house, I've protected my car, and I've protected my flat screen TV by just putting the correct structure in place. Now, why do I want the B&B to be putting the property into the closed corporation is because then I'm losing the protection, number one, and number two, it's excessively expensive to transfer that residential property into the B&B. So when your business is exposed to legal liability and you want to protect your house and your personal assets, use another structure. Don't put your house and your assets in the same structure. Separate your business from your personal life. Does that make sense? Same thing could happen if we've got staff and the CCMA is approached because we unlawfully dismissed the staff member and the CCMA agrees with the staff member and says, okay, now you've got to pay 50,000 rands worth of salary because it's 12 months salary that you are due to pay. I said, well, I don't have it. If you're a sole proprietor, if you're a partnership, you will have your personal assets attached. What you need to do for yourself, and I can't tell this, make this decision for you, you've got to decide what is the risk involved, what is the cost of covering that risk, and am I prepared to take the risk? So if you think it's cheaper for you and you can cope with a legal claim, then don't form the CC. Okay? So I'm not saying you must rush out and form closed corporations. You need to understand what your risk is and what the cost is of covering that risk. A couple of years ago, they promulgated some sort of draft legislation that they're going to can CCs. We don't want closed corporations anymore. You know why? PTY Limiteds, so you get some serious, it's a perception thing, isn't it? If you go and put a proposal into somebody and you're a sole proprietor, they're going to think, it's just another backroom business. If you go and you propose a closed corporation, they're going to say, okay, it's a bit better than the sole proprietor. But if you go as a PTY Limited, all of a sudden the PTY Limited is the flavor of the month. This is a well-run business. Perception is reality. So from an external perspective, I've got protection by using a closed corporation or PTY Limited. What I don't have is protection if I sign away suretyships for that CC. So if the bank lends me money, or if someone lends me money, my CC money rather, the chances are probably 100% they're going to ask me to stand surety. So what they do is they say, we'll lend the CC the money, but we want to take your house away if the CC doesn't pay. That's how suretyship works. Okay. You'll lose your protection like that. Okay. On the other hand, you will lose the protection of a closed corporation, ladies and gentlemen, or a PTY Limited if you run that business recklessly and negligently. So if you just don't care what happens, you can be held responsible for the debts of the CC. But if your CC builds a garage for Bill Gates and your CC employees decide that on Friday, 3 o'clock, they'd rather be at the Keg and Baron or wherever it is, and they don't do the job properly, and Saturday morning the wind comes up and drops that roof on his Ferrari, your CC is responsible. Okay? Not you. So for that reason, in the construction industry, you better be operating as a sole proprietor, not as a sole proprietor or a partnership, but as a CC or PTY Limited. Because the only way that that Ferrari owner is going to hold me responsible is if I stand surety for any damages that my CC causes him. And that very, very seldom happens. And I'm going to come back to that in a minute because it's important to protect you as well. The other reason why I like a closed corporation is because we can use the tax benefits of the small business corporation tax rates. If you're a small business corporation, you get taxed at a better rate than the normal non-small business corporation, not the turnover tax guys. They've just got a flat rate. Okay, now what are the rules for a small business corporation? Well, the first rule is you've got to do turnover of less than 14 million rand. Second rule is that your business must be owned by you or a natural person. It can't be owned by a trust or another CC or another company. Okay, so it must be owned by a natural person. Number 3, if you're a personal service company, which is a company like estate agents and like me, consultants, you've got to employ at least 3 people. And those 3 people is not your cousin and your auntie and your uncle. Okay? It's got to be people that are related 3 degrees away from you. The fourth issue is, and I've forgotten it now. The fourth issue is, you can't earn more than 20% of your turnover from investments and things like that. And then, unfortunately, for the labor brokers, you don't qualify. Okay. So, if you are not aware of whether you qualify or not as a small business corporation, go and speak to that man in the corner there. Or go and speak to your accountant. Very, very efficient. The other point I like of a good business structure is that it avoids you, or no, let me rephrase that, it doesn't avoid. It helps you realize when you are competing with your business for cash flow. Because when the accountant does the tax and the financials for you, he's going to split out all the personal stuff. And then you can see whether you are causing the problem in your business. Maybe you shouldn't be riding the X5. Okay, maybe you should be riding an X3. Okay, so that's why I like the business structure. It actually separates the private and the business expenses. So from a business structure point of view, ladies and gentlemen, I think there's a lot to be said for separating your business life from your private life. Again, I want to reiterate, if it's a cost thing for you, determine whether it's worth the expense. So there we go, ladies and gentlemen. You've got your cash flow sorted. You've got your plan. You know the structure. You need to have processes. The important ones I've put up there. Debtor control. You don't need a fancy computer system to do debtor control. You need to know, number one, who owes you money? Number two, how much does that person owe you? Number three, when is it due and payable? Maybe by the same token, you also need to know who you have to pay money to, how much it is, and when is it due. Your cash flow would be sorted. So try and extend your creditor payments if you can. Don't pay cash up front if you're not getting a discount. You sign the checks, please. They can write them out, pay SARS and the amount, but you sign the check. Internet banking, you set the payment. You can let someone else set the payment up. You authorize it. Please. You will avoid a lot of financial angst if you keep control of it for two reasons. Number one, you make sure it goes to the right person. Number two, it gives you a feel for your cash flow. If you need to keep a lot of stock, make sure that that stock spins. In other words, keep it on the shelf. Take steps. Do what Bill says. Take steps to get that stock off the shelf faster. So instead of spinning your stock every 3 months, maybe you want to spin your stock every 2 months. If you keep financial forecasting and cash flow figures like this, you'll be able to calculate what your stock spin is. So the 2 points on stock is, number one, if you have to have a lot of stock, make sure you sell it quickly. Number two, if you don't have to have a lot of stock, make sure your stock control is good. Buy it just in time. No point in having 1,000 T-shirts on your shelf in October when you only need it in January. But by the same token, don't not have stock, okay? Because if you don't have stock, you can't sell. Ladies and gentlemen, you need to have employment contracts. So when you start your business, this is what I want to leave you with. Make sure you do the cash flow. That's going to give you the viability issues. It's going to identify when and where problems will arise, if they're going to arise. It keeps you focused on your gross profit, on your net profit, on your break even, and it can even do your stock control for you. But that's not where it starts and ends. You have to have the correct structure. If you want to protect your personal assets, you have to have the correct structure. If you are exposed from a suretyship point of view, then that's the way it is. But that's unfortunately what we as small business owners have to deal with. Thirdly, if you have processes in place where you monitor the money coming in, you monitor the money going out, you monitor your stock, you monitor the financial controls, you will go a long way to being beyond remarkable. But guess what? It all starts with you. I can stand here for hours. Bill can stand here for hours. The bankers can stand here for hours. But you need to make it happen.